Hey guys, welcome to the second episode of Money Matters Daily, where we're going to break down the news headlines of the day and try and explain them in really simple, digestible bites. Let's get started. Okay, so here's a really interesting story to follow. It appears that Mumbai is the third largest market for data centers in the APAC region, which is broadly the Asia Pacific region. I think our overall capacity stands at over 2,000 megawatts, 2,312 megawatts, just behind Tokyo's 2,575 megawatts and Shanghai's 2,700 megawatts. And pretty interesting story because the government, with its Privacy Act, has very strong data localization requirements, particularly around the financial services ecosystem. And so it's really not surprising that Mumbai would emerge as a major market for data centers. But I would expect this to sort of branch out because there's this push towards decentralization. I think even we read an article recently where the head of AWS India is committed to setting up a separate second data center in Hyderabad. And Azure and GCP will also be setting up multiple data centers, not only in Mumbai, but also Bangalore, which is a major technology market, Hyderabad and Gurgaon, all of which are major technology markets. So it continues to show India's strength in the digital ecosystem. Okay, so we've had a flurry of news from JSW Steel. So following the results that they reported on the 19th of May, which were mildly positive, the stock reacted mildly positively as well, as they were 13% up quarter on quarter. That being said, JSW has had a very torrid last year on account of high energy prices, and their net debt continues to remain quite high. But some really interesting pieces of news have emerged. Primarily, they formed a 50-50 JV with Japan's JFE to produce cold rolled grain-oriented electrical steel, which is primarily used in transformers and really electricity infrastructure. And simultaneously, they've bought out National Steel and Agro from the NCLT, which was in bankruptcy proceedings, which was also a producer of cold rolled steel. So some interesting synergies there. But quite broadly, I mean, mixed bag of results as you'd expect. As with any commodity company, any steel company, very cyclical with their operations. And, even though they're India's largest steel producer at 27 million tons of steel overall, and they're continuing to invest in capacity, the historical performance has been wildly cyclical because of the cyclical nature of their demand and suppliers. The steel prices go up and down, and China is a major competitor where a lot of their state-owned enterprises receive subsidies to produce steel. And the biggest input to steel making, which is iron ore and energy, which is coal or natural gas, has also been very expensive. So I think you can see that performance in their balance sheet as well as their annual results, which have been relatively disappointing but not unexpected. So we're going to continue following the story of the withdrawal of the 2000 rupee note. Now, following the clarification of the RBI governor yesterday that the 2000 rupee note is still legal tender and that an identity will not be required to exchange the 2000 rupee note into 500 rupee notes, and that it can be done in any bank account or any bank branch. I would think that the urgency to exchange the 2000 rupee note will have subsided, but it seems like a lot of consumers are still very catchy about using the 2000 rupee note. In fact, Zomato tweeted that liquidity into the banking systems. Now, broadly, that's because consumers are going to deposit their 2000 rupee notes, and in many cases, they're going to withdraw those 2000 rupee notes in 500 rupee notes as well. But of the 3.6 lakh crore or 3.6 trillion rupees worth of 2000 rupee notes out there, it is expected that 1 lakh crore or 1 trillion rupees will stay within the banking systems as consumers continue switching to digital payment channels. And what that's going to do is that's going to create excess liquidity on bank balance sheets, which gives them more ability to give loans. Now, primarily, loans are being given from banks to NBFCs and then NBFCs to SMEs and SMEs. And ultimately, we'll have to see if that credit demand continues to keep pace with the high liquidity that's now in the banking system. One sort of unaccounted for factor in this is how the dollar is going to perform. If the dollar starts strengthening and the RBI needs to start defending the rupee because of the additional liquidity that there is, they might have to conduct open market operations, which is where they sell some bonds to the banks to remove liquidity from the banking system, or they might have to purchase more dollars and sell more rupees, taking liquidity out of the banking system. But if the rupee continues to hold strong, then they may have the option of avoiding open market operations, which they conduct on a regular basis anyways. So you might have noticed in the markets today that all Adani stocks hit upper circuit once again for the second day in a row. And Adani Enterprise closed up 13%. Now, for those that are wondering what's going on, you might remember when just a short while after the Hindenburg report came out, Adani was looking to raise 15,000 crores through an FPO, which is slightly oversubscribed and then withdrawn. And after the withdrawal of that FPO, GQG Partners invested 15,000 crores or almost $2 billion primarily in Adani Enterprises and Adani Ports. And what's happened here is that GQG has raised its holding in the Adani Group by another $1.5 billion or about 10%. While the details of this purchase and this holding is not fully clear, Rajiv Jain, the Chief Investment Officer of GQG Partners, has described Adani as the best infrastructure assets available in India. And irrespective of what you think of Adani and the Adani Group, the injection of $1.5 billion of capital into the Indian equity markets is definitely a positive. So markets were up marginally in trade today. The Sensex was up 0.18%, and sorry, the Nifty was up 0.18%, and Sensex was up 0.03%. I think the top performers in trade today were expectedly the Adani Enterprises Group, following the GQG news, and I think the main losers were really the IT stocks, and that's probably driven by continued market sentiment and weakness in the US market. Other than that, pretty neutral day in trade today. Hopefully, you found our daily useful and interesting. And we'll aim to be back tomorrow with some new interesting news and some fresh knowledge. And please like, share, and subscribe this video if you found what we have to say interesting. And we look forward to seeing you with us tomorrow.